Hello traders, Captain Safa here from Algo Tradingo. In this video and some following video, we want to explain some introductory items in the forex and CFD markets. And I know that some of you will think with yourself that these are introductory items and we heard a lot of things about these items before. But I want to notice some new item that you may haven't heard until now, and I think that firm grasp of these items will get you different perspective in your overall trading. Okay, so let's start with the swap. We want to understand the swap. Swap is the cost you pay for your position to be kept open during the night. So if you close the position before night, you will not pay any swap. But I speak about another kind of swap in the future market. That is different with this kind of swap. They have the same name but with different perspective. And that you have to pay is based on the LIBOR pay interest rate. That is the term used for the interest rate of the banks of England. It is the highest interest rate in the world. So brokers will get from you the LIBOR interest rate that is so high in compared to annual interest rate in the US or UK. So it's good to know that the LIBOR interest rate is based on 1 day. You know that if you want to borrow money from someone for 1 year, the interest will be less in compared to if you want money for 1 month or 1 day. That's because in the borrower perspective, if he or she works with one person and check the situation of that person, and if that person is good and he thinks that he can pay back the money, he pays the money to him or her and get the interest in 1 year. It is good for the borrower. But if you work in such a way that you want to get the money for 1 week, the person who wants to borrow to you, for example, in 1 year, if he wants to work with other people like this, he or she have to pay money to, for example, more than 50 people in a year. And maybe one of them get bankrupt and he or she cannot pay back the money to the borrower. So the risk involved goes higher. So the persons who wants to borrow their money, they prefer to work in long term with someone that they can trust to him or her. So the LIBOR interest rate is highest because it's based on 1 night. So consider that it is a high interest rate in compared to annual interest rate. Let's explain the swap for Euro USD and let us understand how to calculate it. When you buy Euro USD, actually, you are borrowing Euro from your broker because, for example, your account is 1 to 100. So you have to pay 1% of what you buy. And for 99% of that, the broker will lend you money. So he will get interest rate based on that. And you should pay swap for that. And if you keep trade open until Wednesday, because you can see in their agreement they told you that if the trades open until Wednesday, all other days of the opening trade will be calculated based on Wednesday night. And you have to know that Wednesday LIBOR is the most highest interest rate of LIBOR in each week. So now the swap is calculated based on LIBOR. And it is important to understand what is LIBOR that I told you, and let us understand how it's calculated. And the other item that you need to know is about the difference between a LIBOR interest rate for different assets in the pair. So in the pair, if you have, for example, 2% for Euro and 1% for USD, you have to pay 1% for swap if you buy this pair. But if it is 1% for Euro and 2% for USD, if you buy this asset, you will get swap. But you have to know that the amount of swap that brokers will get you is much less than what they pay you. So in this way, they do not let you to do carry trades. It's important to understand that this kind of regulation is to prevent retail traders to work in the market as a carry trader or position trader. As an example, if you have to pay $1 to be in the position for Monday night, and you have to pay, for example, $1 for Tuesday night, but if the Wednesday labor price goes to $2, that is the highest labor, all other days calculated based on $2. So you think that you have to pay $1 plus $1 plus $2 for 3 nights, that is $4 swap, but you will face with $2 plus $2 plus $2 and sum of it a $6 swap. This is the way that brokers work with you, and you can see in the agreement of all the brokers the item like this for CFD and forex brokerage. So be careful about the swap. It's one of the reason that you can't work as a carry trader in the brokerage, because if you want to do carry trades, the amount that you will get from carry trades is less than the amount that you have to pay for the swap in long time carry trades. So if you want to do carry trades, you have to go to the liquidity providers, big amount of money. So it's impossible for the retail traders that do carry trades in their account. And be careful to do not do position trading in the brokerage, because the amount of swap that you have to pay is so high, and you have less chance to win your position in the long term, because the amount of swap that you have to pay for each night is high. So if you have enough money to do position trade, go to the liquidity providers and search for them and work with them, and do not use brokerage for this kind of trade. And as I told you before, for the future market like oil, WTI or Brent, you have to consider that you will face with two kind of swap. One of them is like this, about the money that you borrow to buy or sell or anything, and the other will about the contango and backwardation that I explained to you before in another video.